The most valuable things on Earth, commercial buildings and estates, represent trillions in wealth, yet that capital remains completely frozen. You cannot spend a skyscraper. Selling even a fraction of that property involves months of friction. Legal gatekeepers and physical paperwork slow the transaction down to a crawl. Real-world asset tokenization, or RWAT, creates a bridge, linking physical ownership rights to digital tokens on a blockchain. This illustrates fractionalization. A single, expensive asset is digitally sliced into thousands of tradable shares, allowing investors to own a portion of a property otherwise out of reach. Once tokenized, it moves onto a blockchain, becoming available to a global pool of investors, removing institutional barriers. In the early 2020s, many decentralized finance projects prioritized rapid growth over structural safety. Without a foundational architecture, the resulting collapse was inevitable. Disruption without discipline is a financial disaster. Safely moving physical wealth onto a blockchain requires a system balancing digital liquidity with strict institutional rules. To prevent the failures of the past, Sigma BankAI avoids complex real estate in its initial launch phase. Phase 1 focuses exclusively on the path of least resistance, starting with highly liquid assets like foreign exchange and stablecoins. These liquid assets serve as a controlled sandbox. They already possess deep market depth and clear regulatory definitions, removing the legal guesswork. Processing these straightforward assets allows the developers to rigorously stress test the underlying payment protocols before introducing any physical variables. Executing the basics with precision builds the institutional credibility required to eventually manage complex, illiquid markets. Scaling a high-volume financial sandbox usually requires an army of employees. Project Sigma aims to do it with a core team of only 3 people. This lean model relies on Agentic AI. Rather than using siloed software tools, artificial intelligence is integrated directly into the system's operating layer. These agents function as an autonomous back-office workforce. They are capable of making real-time decisions within the financial nervous system. In this workflow, a compliance agent monitors the stream, isolating a transaction the millisecond a regulatory breach is detected. Simultaneously, a settlement agent monitors network health. If a payment rail experiences high latency, it automatically reroutes the transaction through a more efficient path. The metric of success in this phase is transactions per employee. High volume managed by a small team proves the architecture can scale without human error. Integrating AI at the OS level ensures mathematically precise discipline, stripping away the bias and delay inherent in traditional financial compliance. Once the liquid sandbox is validated, the system moves to Phase 2. The proven AI architecture is now applied to complex, illiquid assets. Fine art, private equity shares, classic cars, and real estate are prepared for tokenization on the Sigma rails. AI precision transforms these physical assets into liquid entries on a ledger, manufacturing new markets for previously untradeable wealth. As more assets are onboarded, growth follows Metcalfe's law, which states that a network's value scales exponentially with its density. Adding diverse assets creates opportunities for cross-collateralization. Every new asset added increases the utility of all other assets on the chain. This network density provides a structural fix for illiquidity, creating active, deep markets for historically locked wealth. This convergence aligns institutional legal standards with digital speed. Now, heavy physical wealth moves with the same precision and frequency as a liquid currency.